explain the difference between permanent and term.
Yeah.
We don't want to get too complicated here because obviously we could talk for hours on this, but
yeah.
You've got permanent, you've got term, you've got disability, you've got critical illness. Maybe just speak to some of the various different types,
yes.
and when they're applicable, because I know, like you said before, a lot of people get fixated on, okay, I got life insurance, so if I die, everybody's going to get paid some money and great, which is true, and so that's a first step in the right direction. But I know personally, I make sure that I've got enough of that, for various different purposes of planning and cost payment and so forth. But then, I'm not likely just to suddenly die.
Yes.
I'm likely going to get sick or disabled.
Right.
So that's where I think you'll say critical illness and disability kick in and become important tools. So what do you think about that?
Yeah, that's a great point. That there is the risk end of using life insurance, which is absolutely a great thing to do. It's the term insurance. So if we have the couple in their 40s with the big mortgage and the young kids, we need to get term insurance in place there to cover the risk if, heaven forbid, one of those parents is unexpectedly not here anymore, because that happens, of course.
Of course.
So term insurance is low premiums and high coverage. Reason that is because the length of the term is going to be defined when we issue the insurance.
Right.
If we have a 43-year-old, it's going to take out 10 years worth of term life insurance for $1 million. The insurance company doesn't think I'm going to die in the next 10 years.
Right.
So the premiums are low. They don't think they're cutting the check.
Right.
Right now, if we look at permanent insurance, this is entirely different. There is no associated term with it. It's me taking out that policy, and I pay for the premiums until I pass away.
Right.
So that's the critical difference. With the term insurance, we don't think we're paying out. With the permanent insurance, we know we are, just a question of when.
Right.
That's why there's a big differential in the premium amounts for the term versus the permanent.
Right.
So just off the top of my head, if I wanted to have $1 million of coverage on myself, I'm certainly looking at less than $100 a month.
For term.
For term,
yeah.
Yep. And for permanent, if I want to have $1 million of coverage on myself, I'm looking at somewhere in the neighborhood of $10,000 or $12,000 a year for the premiums.
Right.
But that's again because the company is cutting $1 million check. They know they are. They don't know when, so they need some financial inbound in order to be able to do that.
Right.
A great thing about a permanent insurance policy is that it has this organic rate of return in it that isn't tied to any dividend scales or any stock market performance. It's a guaranteed thing where the sum of your premiums paid are always going to be substantially less than the death benefit of the policy.
Nice.
If you've put that policy in place at the appropriate time, as we're talking about.